Hello investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I've done in the past and continue to do in the future, I leave my lines on the chart so you can see how the past forecasts have worked out. And you can see these zip lines, as I call them, hit the gap, fill here. We hit targets to the downside, again to the upside, to the upside. We're very close to hitting this downside target that I set a couple of weeks ago. And if you look at what's happening with the price action, we do have a doji. What is a doji? A doji is a sign of indecision. It generally forms at pivot points. And with that doji forming right at the 20-period moving average, I find it interesting that it's forming right at a key role reversal support level. What is that? That's when resistance, once broken, turns to support. So while I still have my downside target in place here, I think that we could very well bounce to maybe fill some of these gaps here before going lower. There's going to be a big test next week to see whether or not that 20-period moving average holds as support. If it doesn't, as I mentioned last week, we are caught between two gaps. There's a gap down below the market, there's another gap up here. So we could just oscillate in this area for a little while. So expect that, prepare for it. Option traders will most likely love that because there's so much you could do in a sideways trading channel. But again, I will leave that downside target in place right there for you, keeping that downside target right there at 334.76. Now, as we move on to the IWM, as I go through these charts in alphabetical order, you can see that we did hit my downside target from last week at 182.53. There is still a gap below the market. Now, this chart is a little bit different than what we've seen in the DIA, because now that we're down below that 20-period moving average, you can see that the volume is increasing on the way down. So for next week, I think IWM is going to continue a little bit lower on that higher volume, and that downside target is going to be set for next week at 178.66, at which time I do believe we could see a bounce up to that former support, which was here. Remember, role reversal is flipping back. We had resistance, once broken here, acted as support, at least yesterday on that low. Now support is broken. What happens? It flips back. It reverts back to resistance. So again, IWM, in a trading channel here, again, a sideways range, it is what I would expect moving forward. So again, to reiterate, the downside target on IWM right there at 178.66. Now moving on to the Qs, we have a downside target still in place. This is going to be interesting. The tech heavy Qs is taking a hit recently over the last week. We have a pretty dramatic pullback or pivot point from those highs. Now, we have a different condition here because we have a bullish engulfing candle here on the Qs that has not really resulted in any kind of a pivot. But I think next week we could see a little bit of a zigzag where we see an upside target at 365.61, and then I think we're going to pivot lower on our way down to this target down here, which again was 346.73. I'll adjust that downside target to match that, and then what I'll do is I'll race that so we only have one little bit of a two-part forecast here. So the Qs, again, a little bit different. I'll talk more about the tech sector and how AI is affecting that ETF moving forward. Now, if we look at SPY, again, same as the Qs, we are on our way down. We do have an increase on the way down. We do have a bullish engulfing candle from yesterday. We do have a gap above the market. We have a gap below the market. but I'm going to keep that downside target in place. And that is because if you look straight down below, we have a cross forming here between the CCI and the zero line. A cross below the zero line is going to most likely result in downside pressure for the next 2 to 4 days after that cross. And it's been a while since we've had a cross below, so I'm going to keep that downside target as I mentioned down there because of the CCI and the increase in volume on the way down. Now looking at the VIX, again, some are saying it's obsolete. I say no, absolute no to that. We have a bullish harami. It is considered to be one of the most bullish candle patterns right out there with the bullish engulfing. So I'm keeping my intermediate term target at 1720 on that. Look down below, the CCI is about to cross with a buy signal. The stochastic is about to cross with a buy signal. We have what is a half signal here. As I zoom in, a half signal is when you have a higher low but lower high. You could also have a half signal like we saw yesterday with a higher high, lower low. But that, again, two half signals back to back does not equal a pivot point. I think we will see the pivot point next week on the VIX, which will most likely put pressure on the S&P. Now, I'm going to throw something out there for all of you silver lovers. I have now bought into more of a long silver position. We have an official pivot point here on silver. We have the stochastic hinging higher. We have the CCI almost at a buy signal hinging higher. Gaps above the market. You may recall my mentioning my downside target on silver at 21.02. That has hit. Now I'm putting an upside target on silver at 21.47. So we're talking about another 5% move higher on silver. I feel good about that. And for those of you who tuned in to the cocktail hour for Market Rebound last week, I made a bold call on Bitcoin. I stuck my neck out there and put out a $30,000 target on Bitcoin. And I will confess I did not expect that $30,000 price target would hit so quickly, but it did. Now I'm expecting a pullback in Bitcoin, but I want to talk a little bit about this because with BlackRock's involvement in the creation of the Bitcoin ETF, I think that could be the game changer that the Bitcoin whales have been waiting for. I'm going to come right out right now and tell you that I'm putting a longer term target on Bitcoin right here at these highs, where I think we're going to see almost 50,000 on that. I'm going to put that high right there at the highs from March 28th. That high being 48,475. So I'm putting an official target on Bitcoin. You may recall my longer term target back here, again, has been reached ahead of schedule. I had a target of 28,182. Then last week I raised that to 30,000. I'm getting pretty aggressive on that upside target on Bitcoin right there again at 48,475. Now let's talk a little bit about what's happening in the general markets and the geopolitical situation here, where if you look at some of the economic leading indicators that are being ignored by the market, this is the black box quick service same store sales that is put out by Bloomberg Intelligence. Now, what does this mean? Those of you who are franchise owners, those of you who deal with retail, any restaurateurs out there, you know that these are leading indicators. And let me explain this. The stores that you shop in track your purchasing habits. Any of you who belong to a membership or let's say Tractor Supply reward system, anything like that, you give them your phone number, your email, whatever it is, they're tracking your buying habits, they're tracking the volume at which you purchase, the credit card versus cash if you're trading or buying in those currencies, whether it be cash or a credit card. They're also tracking the traffic. Now look what's happening. We have same store sales from the beginning of the year is down. We're looking at The amount that you're purchasing per purchase is down. The traffic, again, is down. These are leading indicators. People are buying less. They are stepping into those stores less frequently, and they are more or less dropping the overall sales on that. That's number one. Pay very close attention to that. What has been driving the Qs up? Let's take a look at that. It's 7 stocks, 7 AI stocks have been driving the Qs up. Some are saying we're in a bull market. You might say secular bull market, but it's not a broad-based buying trend that Charles Dow states in Dow theory. If you look at the overall trends for the Russell 2000 trend is still down. If you look at the S&P composite, you have pretty much a sideways trend. That is not a bull trend. We are not seeing a broad-based rally or trend to the upside, not at all. Hence the reason why I continue to keep my price targets low. My downside forecast for the 2020 lows is still in place on all those targets. I am not changing my bias in the market, although I do take short-term long positions, bullish positions. And I'm telling you, our members who might be feeling the squeeze alongside many of the other institutions who have $1.2 trillion in a short position, those very same institutions have taken a hit of over $100 billion in a hit on that $1.2 trillion portfolio. They are feeling the squeeze, but we're talking $1.2 trillion by institutional short sellers. That was put out by Bloomberg and Reuters not too long ago. Keep an eye on that, Google that, look at that, read about it, and you'll see again, that's a pretty significant short position. Now, this is feeling awfully similar to what I've described into the 2000, the crash of 2000. Where are we in comparison to that? Let me zoom in for you here, folks, because this is exactly where we are. I started calling a topping pattern back here in 1999. What happened? It continued to go up. All right, now you might feel like, did I switch my bias back then? No, I held it because I saw the divergences. I saw the oscillators moving lower. I saw the topping pattern formations. Where are we now as compared to where we were then? We are right here, folks. We had the dot-com era blowing things up to the upside. We had short squeeze happening all over the place. We had Alan Greenspan at the time labeling this as an irrationally exuberant market. The market saw a little bit of a blip lower, and then they rallied it into Greenspan's face, ignoring the Fed just like we're ignoring the Fed now. And what happened? We had a major bear market that resulted in a 50% drop in a 3-year period. This NASDAQ sell-off took 13 years, folks. I'll repeat that. It took 13 years to recover back to those highs. I think what we're about to see is going to be much more significant than what we've seen in the past, especially in 2000. So keep your eyes on the charts. Keep your eye on managing risk if you're long to the downside. Keep your eye on that. And if you're short, I would say be patient, but still manage risk to the upside, right? So that's our market report for this week. Have a great weekend, and we will talk to you on the next report. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.